Okay, I'm not doing an exciting stock today, but I'm doing a Lincoln National, a dividend champion insurance stock that's been around like for years and years and years and years. Been around since 1800s. After all the Eagles Field, and then like Lincoln Field or something or something. Yeah, that was they're trading at $47 a share. Got a market cap of 9.23 billion. Have a P of like 12. So actually, they're kind of undervalued. I still want to buy them right now. I would. Oh my god, I got. This is a still though when you like would buy them at like 30 some dollars. I mean, the beta is kind of volatile. I think a beta above one is like 2.25, so it's volatile. 1.684 dividend yield. So they have a good dividend. They really do. Ex dividend day. Dividend yield's good. It's not too outrageously high. It's not too outrageously high. It's not bad buying it now. It's just when I was buying it in the 30s, it was really I was trading. It was a pretty good trading in the 30s. Legally high was like 50, $61. There's some articles on Lincoln. I like Lincoln National. It's one of the better stocks. While Lincoln National is poised to thrive, has seen headwinds stemming from COVID 19. However, it's executing well on new and existing deposit growth. A good company, probably, to work for. And Lincoln National maintains a strong balance sheet. Yeah, they failed last year in COVID 19. They didn't. But they're still going to be like Aflac, like the company that Colton works for, Allstate. They're positioning themselves to do well always throughout, regardless, because they got all these kind of insurance they sell, all these kind of these retirement plans, all that. I mean, they're all good companies. Aflac, Allstate, Lincoln National. It was headquartered in Pennsylvania, operates under the marketing name Lincoln Financial Group. Was founded over a century ago with the endorsement of Abraham Lincoln's son, Robert Todd Lincoln. Today it serves 17 million customers. Reported rather mixed earnings in its latest quarter grew a net income totaling 398 million. However, the largest driver of that was an update to its non-performance risk calculations. Looking ahead, expect a major risk and headwind for the company. But honestly, regardless, you're still going to have death policies or all those, what's those insurance policies to always protect. Like he would know this because he's more in insurance, but he knows all about the insurance stuff. What's those policies when you have like, oh my god, I know this. I studied more. What's those policies where it protects people when they're dead? Yeah. But they'll always have those policies that went the stuff. Again, this is not a sexy company, but I mean, you're really never going to be like, it's a good one if you're going to be in retirement for like people in their 50s and 60s. It would be. Because they're probably always going to be paying dividends. Meanwhile, let's get to the balance sheet. Maintains a strong balance sheet with a risk-based capital ratio of 444%, which is 6 percentage points higher than it was at the end of 2019. Plus, his debt equity ratio has evolved to 37% from 43%. Lastly, extended its near-term debt maturities and has an A minus credit rating. So, I found the shares to be attractively priced. I'd buy it today compared to being at $51. It's a steal. It's at 47. If you're getting lower 40s, it would be even better. Let's see, go back down to the. Like I said, this is not a sexy stock. It's not one that's going to get you, like, probably make you a fortune, but it'd be a good retirement stock, dividend stock for your retirement. Again, it's like Colton. It's a good company. It's Allstate. It's Lincoln. I mean, no, I'm not gonna pick one. Aflac, MetLife. Revenues are up. Net incomes, net profit and margin, and that was when they're like what worst quarters operating income. But people are always going to need insurance. Cost of revenue is up. Cash in handy, big deal. That's just a good dividend stock, retirement stock. I don't care about COVID-19 anymore. People are always going to need insurance. That's where he's right. That's why. It's honestly a good industry to have a career in if you can sell. He's right.